Welcome to this Killick Explains video, and this time I want to take on a common question that I'm asked, which is, what should I do, Tim, when markets take a sudden dip? And stock markets certainly can do that. Drops of a few percent, 10%, 15 or even 20%, not unheard of. And in a bad year, you may even get drops of 50% or more, even if we haven't seen one of those for a little while. So, question is, what should you do about it? And I'm glad to say that the results of a recent poll revealed that most people would actually do what I consider to be the right thing. Now, I asked the question, what should an investor do when stock markets take a sudden sharp dip? And I'm glad to report that only 6% of people, roughly speaking, said they would dump all their holdings and run to cash. Now, tempting though that might sound as the market drops, it's a really bad idea for a long-term investor because you won't get your timing right when you need to go back into the market. And in the meantime, you'll be sitting there sweating, wondering what is the time to get back into the market. And if stocks carry on falling for a while, do you sell more? What do? So market timers trying to get out ahead of a dip, get back in before a rise, are doomed to a lot of stress and usually getting it wrong. Now, the next option I offered was to sell some shares as the market dips, and around 4% of people said they'd do that. Not many, and I'm quite glad about that. I mean, what is the logic? Hopefully, if you've got your wealth allocated correctly across 3 buckets, a rainy day fund for emergencies kept in cash, foreseeable calls on capital that are coming up in the next few years, allocated to something like cash or possibly short-term IOUs, then the rest of your money, your lifetime savings, can be committed to the equity market. And there shouldn't be any need to trim a holding just because the market dips. And anyway, which one would you trim? And so on. Now, the next answer was hold on to your stocks and shares and wait for the market to recover. And 25% of people went for that answer. And yeah, fair enough, not a bad answer insofar as sit tight. Markets have shown their ability over time to keep pushing on upwards. They're quite stubborn like that, even if they take a dip in the short term. If we go back to the early 1970s, a period not many people may remember, but believe it or not, the UK market lost 2/3 of its value very quickly. But even then, it subsequently recovered and went on to better things. And if you look at a long-term chart of the UK equity market, no matter what's been thrown at it, Brexit, a pandemic, dot-com crash going back in time, the financial crisis, it's always managed to climb up off its feet and march on. And that's why I'm quite pleased to say that the top answer actually was, if the market were to take a sudden dip, I would try and add to my holdings. That was around 65% of the people who replied. After all, if you like a holding and it then gets 10% cheaper, why wouldn't you take the opportunity to add to it as a long-term investor? I mean, Warren Buffett, the legendary American investor, said, when food gets cheaper, you don't buy less of it. And the same logic can be applied to shares. So I like the idea that some people would be contrarian. It takes a bit of bravery. They wouldn't panic sell. They wouldn't force themselves into a position where they had to sell and raise capital. They would keep a steady mind and look for opportunities to pick off cheap stocks that are unloved by the wider market, but might subsequently prove to be a useful addition to their portfolio. So there you have it. Now, that's a big topic covered in a very short video. So if you'd like to find out more, then please go to our extensive library at killick.com/learn. The shares and investing principles tabs are not a bad place to look. And if you'd like a copy of my written guide on how to invest in equities, it's free. Please do email me, editor@killick.com, and I'll be delighted to send you a copy and also answer any related questions on what I consider to be quite an important aspect of long-term stock market investing.